All right, ladies and gentlemen, welcome to Freshly Minted. Incredibly excited to have you here. My name is Leon Aboud, and today I'm joined by two incredibly special guests. We got Samuel in the house for the first time, and we have Sharbal, our frog. Here at Freshly Minted, what we do is that we cover the tectonic plate movements of the NFT space. I personally believe that NFTs are the most transformative technology since the iPhone, and they have the potential to disrupt and revolutionize entire industries. And if you are a builder or an entrepreneur in the Web3 space, staying up to date with the latest movements of those plates is crucial. And that's exactly what we're going to be covering today. So today we got a couple incredibly interesting stories. So first thing, we have Y00ts is bridging to Solana. That's incredibly exciting. So what has happened and what does that mean to the future of the space? What does that mean to the future of Solana? What does that mean to Polygon and possibly Ethereum? We also have Yuga Labs had their second trip in the Metaverse, so we're going to be talking about that. Some exciting Web2 news. So Ticketmaster, by far largest ticketing platform, just launched an NFT token gated, so we're going to be talking about that. We got some news about Mashi Brothers, about a FUD. We'll be looking at that and many other stories. So I think the first thing we can do is, Samuel, it's your first time here. Would you like to give us your 30-second kind of elevator pitch?
I can indeed. So I guess my background is my name's Sam, or I go by Sam Eve on Twitter. But my background's traditional finance, so I've probably had about a decade of corporate experience, predominantly within financial services. Moved over to the blockchain working group at EY in Australia. Sort of stumbled across NFTs back in 2021, and just went full-time Web3 probably about 18 months ago. So that's like a flash course in my background. And I completely agree with you. NFTs are the future, so yeah, that's why I'm sticking around.
It is worth mentioning that you and Sharbal, you and Kermit work together at the same data analytics firm, Origins, right?
We do, yeah. So I think, when did we meet? Probably it's over a year ago now. I remember you were posting the weekly yield rankings on Twitter. I think I kind of stumbled
Daily.
across a lot of, was it daily? Jeez.
Yeah, daily.
Nuts.
Every single day.
Yeah, it was, yeah, so way back then, I think obviously Jumpman was posting charts as well, and it eventually became a proper SaaS business. So you got Discord tools, stuff like that, so analytics, purely for NFTs. So yeah, we just, I think back in March last year, I started working for Origins, working with a few other GigaBrains, so Omega, Airport, and a few others, obviously Kermit. And then, yeah, just kind of started building out the research arm of the business, so the analyst function. And since then, I've just been posting articles, Twitter threads, all about the NFT market, macro, how that intersects, using that traditional finance experience to overlay that with the NFT segment, or sector.
Well, I'll tell you what, Sam, one of the reasons why I was really insistent on having you here today is because you are a killer researcher. You're a killer analyst. Kermit would often share with me some of your research, and you do an incredible job at dissecting and finding trends and patterns using data as well as your own observations. And that's why I thought, it would be great to have you on today. And I know something you wanted to cover is Y00ts bridging to Polygon. So can you tell us a little bit about that? What's been happening? What are the facts? I know, Kermit, you also have some data about the latest Polygon numbers. So we would love to get started with that, Sam.
Yeah, so Y00ts is, I guess, the second collection to DeGods. Frank DeGods kind of launched that collection probably must have been about almost a year ago now, probably midway through 2022. I see you've just popped up the whale swoosh, DeGods bridging to Ethereum. So Y00ts, they had a bit of a bumpy start back in September last year when they were planning to launch. I think it was about a 2-week delay on the mint. So there's a lot of FUD around that project. But I think they've persevered through. They've gone through that, pushed through all the uncertainty, the doubt, and they seem to execute pretty well on Solana. I think they were the top grossing volume for quite the longest time. And I think the issue was that they're kind of capping out on that blockchain. Ethereum's pretty much where all the big projects are. Polygon is something new. I know that I think there was a confirmed grant of about 3 million, so a golden handshake for y00ts to come over to Polygon. I think they announced that on the Nifty portal, that show, which I think you mentioned earlier on in the day. But yeah, so that all kicked off. They're kind of bridging over. I think the hope is that Frank will bring a lot more projects over to Polygon as well. The y00ts transition or migration went pretty seamlessly. So, and I think, yeah, a few of the influencers are picking up the y00ts pieces as well. So they're kind of buying into the project. So I think it's something, 1.78 ETH4 price, which is higher than what it was on Solana. But there's a few incentives as well. So I think it's kind of like a carrot and a stick process where if you remain on Solana, you get punished with a 33% royalty if you try and sell on Solana after, I think, the end of, or start or the end of April, I can't remember what date. And then there's incentives around no royalties for buying and selling y00ts on Polygon. So I think Magic Eden have put that in place. So they're really trying to push everyone to migrate. And I think the migration rate was ridiculously high. It's something like 90%. So within a very short period. So I think everyone's kind of
I think
realizing
so far only 2K y00ts are still on Solana so far.
Yeah, so I think
So out of
overall,
15K.
so there was originally 15K tubes. I think 13.5K roughly were converted to y00ts, of which around 11.5K have transferred to Polygon. So, I mean, if you compare that to the typical NFT collection, it's pretty much, it's bigger than that anyway. So, yeah, it's, as far as I'm concerned, it's been pretty much a success. And I think they obviously partnered with Wormhole, which were, I guess, their bridging partner, engaged specialists. It became like a seamless process of just literally like a one-click button through, I think, the Phantom wallet, which offers both Polygon and Solana. So all in all, I think the execution's been excellent, far better than it was last year back in September. And I think the vision that they've got, Frank's very transparent, he's open. So as far as running a business, I think he's probably the man to do it. And I see that he's picking up all these Ethereum projects now. So he's picked up Azuki, he's picked up Meme Land, he's picked up a bunch of other projects just to kind of rally the support ahead of the DeGods launch that's tomorrow. So and that's they're moving to Ethereum.
What are your thoughts, Kermit?
Honestly, I'm very surprised by how well they've done. I mean, if I pull up this graph or this chart that Frank shared, Polygon was doing what, 25,000 US dollars of volume daily. So I was very hesitant before y00ts.
Yes.
Before y00ts. So that was the daily average. Solana was doing around 2.5 million, 3 million, which they still are. The fact that Polygon shot all the way up to, you can see over here, 2 million, almost as much as the entire Solana blockchain is making, it was insane to me, right? So I expected a sell the news, a type of event by the rumor sell the news, where y00ts would start dumping a little bit, where we would see a price adjustment downwards. But it's been very impressive what Frank has managed to do, the way he's managed to do it, and the excitement he's managed to bring back to the space. Like Sami was saying, I mean, all the NFTs that he's managed to buy, connect with, and all of these posts. I mean, look, 40,000 people saw this, 20,000 people, 80,000, 30,000. So a lot of people. He's everywhere, basically, on Twitter today and yesterday.
He's going after Doodles, Moonbirds, Clonex, Crypto Dick Butt, everything.
That's a fun name to say.
He's going after Toads, he's going after all of them.
I think he spent about 200K.
So let me ask you this question, gentlemen. 200K in NFTs. Let me ask you this question, gentlemen, and that's a question for both of you. So now that we're about to see the second collection just bridged away from Solana, and DeGods is about to bridge towards Ethereum. Are we about to see a hole in the Solana space? And my question is that hole going to be filled out by another project, by a new project, or an old blue chip like the SMB Solana Monkey business? Or is this going to be a permanent bullet hole in the chest of Solana that we're about to see? What are your thoughts on this question?
Do you want to go first, Sami?
Yeah, I can go first. I think I guess it goes hand in hand with where you see the future of different blockchains going as well. So I mean, Solana's a lot more centralized when you compare that to like the likes of Ethereum. Obviously, so Polygon uses the decentralization from Ethereum as well. So I think gaming, so low value, high volume assets would probably do pretty well on the likes of Solana. Whereas if you're going to go with high value assets that you kind of prize security over speed and latency, then you're probably going to go with the Ethereum. So I think at the moment we're in a bit of a rut because the amount of volume and the amount of trading activity that's going on in the market is capped. We don't have a lot of new money coming in. So I'd probably answer your question and say in the short term, I don't think there's going to be much that fills it. You might have a bit of a pump from other projects trying to compete for that top spot on Solana, and you've got some Solana maxis that kind of stick to that chain. But yeah, I think in the short term, probably be a bit of a hole. And then I think as the kind of the space matures, more people come in, those blockchains will find their niche. So you might have a bigger push for gaming on Solana, and then yeah, your typical expensive PFP collections and other utility on Ethereum and Polygon.
I 100% agree with that. I think we're about to see the specialization, the niching down of every single blockchain, where each blockchain becomes the number one in a sub niche, right? Just like we have Tezos is the number one, in my opinion, blockchain for art, for upcoming artists, whether you're a photographer, generative artist, one-on-one artist, Tezos is the place to be, whether it's with Arbitrum's treasure and their gaming ecosystem, Solana. I know we also have some, last week we covered some news with Solana, or they launched their own gaming sort of infrastructure.
Yes, of course.
Right.
Yeah, if you go on, it was Magic Eden, not Solana. It was Magic Eden.
Magic Eden, right? Magic Eden, more specifically. I mean, we're seeing a lot of these blockchains specialize in certain things, and I think Ethereum, at least for the time being, is going to be the chain where, like Sami was saying, is the store of value, is where all the blue chips hang out and are stored.
Ethereum. Yes,
Right.
Ethereum. I was actually going to be asking that the follow-up question, and this is something I listened to on Bankless, which was a very interesting point. So what we're starting to see is that all the blockchains are upgrading their technologies, and they're all tending towards the same top technological features. You know, every blockchain in the future, whether that's the old ones or the new ones, are going to have fast transaction speeds. All of them are going to be safe and secure to some extent, some more, some less. But all of them are going to have all the features that the typical consumer that is not nerdy is going to need. You hop in your car, you know that your car has an airbag. You don't think twice. It has an airbag. So my question is, when all those blockchains are going to tend towards the top technologies, what is going to differentiate the Solanas versus the Flow blockchain versus the Aptos versus I understand where we're going. Is it going to be solely on culture? So, for example, you might drive a BMW because you're a BMW guy, for instance, or you're a Mercedes guy. What would you gentlemen think? Is it the only differentiating? Is it going to be culture?
I do think that a big part of it is going to be, like you said, culture. So who is on that specific certain blockchain? And I do think with time, we're going to start seeing out an identity forming around each blockchain. I mean, for the end user, because you did bring up the sort of normie, right? The person who doesn't really care about what blockchain they're using. I think we're yet to see what blockchain this is, but a lot is hinting at it maybe being Polygon, right? Starbucks is on Polygon, Reddit is on Polygon, YouTube at least was rumored. I'm not sure if that rumor was confirmed.
Yes,
They put out the purple heart, so maybe also Polygon. So all the major players seem to be moving towards Polygon, right? So I think we're at least the way I see it, because Polygon hasn't specialized itself in something yet, in one sub niche. You have gaming, art, PFPs, stores of value, blue chips, but we haven't seen sort of that easy to use mainstream blockchain. And I think we're seeing the signs of pointing towards that being Polygon. At least those are my early speculations.
Let me ask you a question. See how you answer it.
Yeah.
Would you rather use AWS or Microsoft Azure as your database provider?
Microsoft.
Why?
Why? Because I'm more familiar with it.
Is it because they have easier user interfaces, or because they've marketed themselves better?
It's because it's the first computer I owned, right? So it's what I'm used to. It does what I need it to, and there's nothing more than I need from it.
Well, that's what's interesting, because a nerd would come in and tell you that AWS could be faster, cheaper, safer, and more scalable. But for you, it's like, it's like you have no preference. It's literally like the car example. The point of buying a car is to go from point A to point B. That's the whole point. And then you have all those brands and billion-dollar companies that are always popping out. And it's the exact. So if I like what I'm hearing, because then that means that the future of the success of a chain is dependent on the marketing team of that chain, not on the tech team. I personally, this is music to my ears, by the way, as someone who's like all about marketing and not so much about the technicality. So whoever, if you a new VC funded blockchain and you want to gain cultural relevance, unfungible.xyz.
VC funded, to be specific. No,
of course.
If you're not VC funded, please.
Okay, any closing thoughts about this, about y00ts bridging to Polygon before we move into Yuga Labs' second trip?
No, I think the y00ts transition, it's the actual transition's a success, but something that Frank mentioned was that he knows that him coming over to Polygon, there's expectations on him to bring volume onto that chain. He's going to do everything that he can to succeed in the project and execute on their y00ts 2 roadmap. But I think it just needs to be a bit conscious that it might not actually drive the success of the chain, in which case they could end up bridging again. So there's always that risk. But like you said, I think the Polygon execution of onboarding clients and stuff like that has been second to none with Starbucks and all these different corporates, that it's looking like that might be the chain of choice for the majority.
My closing thought on this, and this is this would be interesting before we move on, is let's just play a price prediction game, not financial advice. So we saw y00ts moving to Polygon. They have a current floor price of about 1.6, I think, right now, as we speak. Is that higher or lower than what it was on Solana?
Higher.
It's higher. So it's higher by about 20 to 25%. So do you think DeGod, are we about to see a floor price that's about, when it does move to Ethereum, is it going to have a floor price about 20 to 25% bigger at launch? Or do you predict seeing that being a lot higher?
So well, not financial advice, but I think it's probably going to be around the 10 ETH mark. I'd probably market sentiment. I'd put DeGods around about the upper mid cap range, close to Azuki, less close to the likes of Doodles, Moonbirds and stuff like that. I think it's currently tracking around 7 ETH. So you probably want to, there's obviously risk involved with the migration. So the risk of transfer, and also you kind of pay a premium for that security on Ethereum. So I would say that 30%, 20% premium on top of that 7 ETH would make sense, just from a risk return perspective. Because you're going to have people that potentially buy into DeGods on Ethereum because that's a chain they're familiar with and they're just waiting for that migration to go through successfully.
Frank has nailed Bitcoin ordinals. He's nailed now Polygon y00ts, and I mean, if history is any indication, then I do think we're gonna see a successful migration for DeGods. My only worry, and this is me also taking a couple of steps back to y00ts as a couple of closing thoughts, we're yet to see the amount of collections. The numbers follow Frank. So we have what's on Polygon right now: Reddit, avatars, Trump digital cards, those did very well.
Apes, something like that?
It's a derivative. I personally don't count derivatives.
No, the Aptos project that then launched on Polygon.
Rec Dogs.
Yes.
Oh man, I hope no Rec Dog holder is watching me right now. I'm not a big fan. I mean, they've got nothing going on
Okay.
except for the first big project to launch. I think there was a project, Bozos, that launched fairly recently on Polygon. That's about it. I can count them with one hand, and that's worrying. Especially
What?
the fact that we're not in a bull market right now. We don't have the volume of newcomers and founders either migrating or building on
Got
top
it.
of that ecosystem. It's I think we are likely to see y00ts slow down. But the good news is that Frank, I remember he mentioned one of his interests is having a launch pad on Polygon. So actually helping a lot of upcoming projects open on Polygon. So I do think he has that in mind. He's a very smart guy.
Very nice.
So very excited to see how things develop.
Do you think that might have been part of the golden handshake? Do you think that might have been part of the agreement with Polygon? Because obviously the intention is we'll pay you X amount to come over to Polygon with the proviso that you help bring in new clients. So this launch pad strikes me as an idea that was something that they've potentially discussed as a way of effectively making good on that 3 million.
Interesting point. We do have a lot of other things to talk about. So talking about exciting thing,
What is this? We're getting censored.
I mean, you're talking about the $3 million Polygon
Deal.
sponsored type of deal, yeah?
It
I mean,
does,
I'm sure.
as a final thought, it does sound like a win-win situation because you don't want to migrate to a chain that's also empty. So I think if it is part of it, because the Polygon marketing team are very smart. A lot of the projects I'm currently, and along with Leon, working with, they've been in touch with them, with the Polygon marketing team. They're very
Polygon
sharp
up,
people. They know what they're doing, and they've got a clear mindset, and they're recruiting right now is what they're doing. They're recruiting as many warriors to go to war, to wage war on blockchain.
Yeah, Polygon are the Polygon team. I've met some folks at Polygon. They're sharks. They're sharp people. Let's talk about Ticketmaster. So Ticketmaster just launched an NFT token gated feature, and I personally find that incredibly exciting. Just 2 weeks ago, we had Shopify announce that they're going to be rolling out token gated experiences on their shop, where by owning a specific NFT, you can access backdoor products, services, offers, whatever that is. Well, it turns out Ticketmaster is doing exactly that. And the way it works is that by owning a specific NFT, you will get exclusive access. You'll be eligible to buy tickets earlier or more tickets or at a cheaper discount. And talking about Avenged Sevenfold, Kermit, one of their big experiment was with the Avenged Sevenfold NFT collection. So Avenged Sevenfold Rock Band, they have Death Bats. It's a 10K NFT collection launched in December 2021. And they recently had they recently had tickets for their concerts in New York City and LA go live. And holders of the Death Bats were able to get early access to the tickets before they sell out. Because I'm sure you guys know, a lot of times when it's a big concert, tickets sell out in a matter of minutes. The site crashes, and then secondary goes on resale for 3-4 times the price. So NFT holders were able to get access to that. And there's two interesting things to talk about right here. So out of a 10K collection in 2 cities, so for concerts happening in New York and LA, they were able to sell 1,000 tickets in total. So that's about a 10% conversion rate. That's a 10% conversion rate. Now my question is, out of those 10K holders, how many of those are actually in New York and LA? I would not imagine more than 1,000. So that means that we've had a 100% conversion rate for people that are locally in that market that converted into becoming buying customers of that. Now, of course, there might be some people that bought tickets from Europe and maybe resell them in the US.
That's what I'm thinking. Isn't that the play? Just whenever there are tickets, just buy Wherever it is, just buy and then flip.
I mean, it is a risky move too, because you might not have secondary price, and now you're stuck with a ticket.
NFT degens are known for not really being hurt with $100 loss.
We're built different.
We're built different.
We're built different.
So every day better said, since I am a Death Bats
Holder, I was able to get 2 tickets into the Section 1 LA Kia Forum for $250, included 25. The tickets are now close to $755, which includes $61 service fee. I can't speak for myself, but these were a win. So it shows you, man, how NFTs could potentially be used in the concert space. And what's interesting is you couldn't buy your tickets with crypto. It was all with credit card. But by integrating that wallet connect, all of a sudden it just opened access. So it's like your key, your pass to extra utility, extra exclusivity. So my question, gentlemen, are we about to see more Web2 initiatives like this one, event tickets, especially this summer, moving into festival season? Are we about to see more activity when it comes to Web2 experiences backed by Web3 products?
So I think my view is that we actually see a lot more Web 2.5 stuff than Web 3. These are real use cases. So whether it's ticketing, whether it's loyalty reward programs, whether it's so many different ways of actually using underlying tech to solve real world problems. I think that's the direction that we're probably going to go. We've had that blow off top back in 2021 with all the PFP collections and stuff like that. But at the end of the day, all that is just swapping your profile for an animal JPEG. There's not too much outside of token gating and stuff like that. So I think, ticketing is huge. Like if you can get access, early access, people will pay a premium for that. They see that as a benefit. So I think it's just coming down to what the basics are and what an NFT can actually do for people. So I think we're going to see an explosion of people, institutions adopting like wallet as a service and ERC 4337, which I think you guys might have touched on last week, and actually using that to drive real change and solve problems. So, yeah.
You know what I'm actually surprised by is there aren't more people currently using this technology. I remember, Leon, what was it? During Expo 2020. It was the biggest talk that they were not using NFTs whatsoever.
Yeah.
Right? Remember that discussion where...
Yeah.
Because with NFTs, you can do so many things that add to the user experience. You don't need it to feel like an NFT, right?
Yeah.
Which is the best part, is as soon as you make the experience seamless. So yeah, personally, I'm just surprised not more companies are using that technology.
My question, and this is interesting, Kermit, because this is something we were speaking about yesterday, is the buyer journey of someone that goes into Web3. So someone receives a ticket as an NFT, receives a ticket, Web2 normie receives a ticket for a concert, that ticket happens to be an NFT. Is that person onboarded into Web3 now?
Right. I love that question. So to give you a bit of context, Sami, and so closing thoughts for the last episode was we were talking about Reddit NFTs, and a big conversation around it was, but are these people actually onboarded onto Web3? What constitutes as someone having onboarded Web3? My thought, or the question I asked, was, instead of asking this question, I'm going to ask, who gets to decide what Web3 is? Is it the 8 million people who are on Reddit and who use NFT under the umbrella of a digital avatar? Or is it the 2 million people who are using OpenSea and who use the definition of a PFP, art, gaming, etc., etc., etc.?
Onboarding to Web3, I think that's pure decentralization, self-custody of assets. Reddit wasn't necessarily Web3, it was Web 2.5. You've got sort of custodial wallets that you could extract the avatars and take them out into your own custody. Now, I think that's probably a mass onboarding to Web 2.5, but realistically, I think that's probably the best place we'll get to. You'll have, most companies are going to have the same interfaces that we see from Web 2, but you kind of you've got the underlying tech underneath. So that to me is kind of where we'll eventually get to. But then I don't think you're going to have the purest view of Web3 for a long time. But it's not a bad thing.
What was your personal experience of onboarding the Web3 space? How did it happen?
It was like I was so concerned. I mean, I traded on centralized exchanges for a while, so like Coinbase, Binance. It wasn't until probably.
But how even going a step before that, how did you even get into cryptocurrency?
So I left EY the first time, joined a startup, so a fintech. I was only there for about a year before I moved to Australia, but during that time, everyone was very, very into like new tech, what was going on. People were talking about crypto. So this would have been 2017. So I downloaded the app, bought some Bitcoin, but then like my life took hold. I moved to the other side of the world, so that took priority, and I just kind of forgot about it. And then it wasn't until probably like the pandemic. So in Australia and Melbourne, we were very much like we were kept indoors because of restrictions and stuff. So we had an hour of exercise a day. We had a curfew from like 8 p.m. till 5 a.m. So we couldn't leave the house. So I was like, well, what do I do with my time? So I was working long hours, but then in the evening I just do crypto research, went down a rabbit hole. And I think the NFT point was probably, so Damien Hirst did the currency. Right. And that caught my attention. I was like, you've got this mainstream artist, British artist, getting into the space, doing quite an interesting dilemma where you either choose the physical or the digital. And I was like, well, this is something new. So in a year's time, people will burn and make that decision whether they keep the NFT or burn it for the actual physical. And I thought this is like a proper use case that I could actually see it taking off. And then I was like, well, if you could have the digital to verify the physical, then that's an actual real use case, because like fake and fraudulent art is quite a big problem. So that was kind of like my journey. I can't remember what was the original question.
So how did you onboard the Web3 space? So what you're saying, if I understood correctly, is it was out of, well, you work in a tech space, in a tech environment prior to onboarding Web3, and it was sort of what people were talking about, right? It was, this is very cool, this is very nice, let me check it out. Let me see what all the fuss is about, right?
Exactly, yeah.
And then as you discovered it, the pandemic happened, then you had a lot of free time, you dived into it, and then you found out about NFTs. One thing we were talking about with me and Leon last week so crypto onboarded the first 1 million into NFTs. Are NFTs about to onboard the first 1 billion into crypto?
I think it's a good point, because I think NFTs are probably the first real use case where you can actually apply it to physical items, tracking them, all this kind of stuff. So whereas crypto itself, like apart from having like a currency that transcends borders in a decentralized way, you've got governments that will probably be against it, whereas NFTs are an actual technology that could solve real world problems. So I completely agree with you. And I think what will those onboarding events be? Probably gaming, loyalty reward programs, ticketing, and yeah, there's so many other use cases as well. And I think it's going to be insane.
That's an interesting point that you're bringing up, Samuel, is that NFTs take the politics out of crypto. Because the moment you talk crypto is the moment you talk about banking disruption, you're talking about politics, you're talking about money laundering. There's a lot that goes into it and brings up the conversation of regulation. But NFTs don't necessarily. And that's why we're seeing a lot of companies like Amazon, they're working on an NFT marketplace before building a crypto token. AMZ, for example. Same with all the Starbucks and all those, they're launching NFT projects, their NFT product offerings before launching tokens. And that kind of shows you a little bit about the sentiment around crypto versus NFTs. It's a lot more positive, a lot more neutral for NFTs than it is. They do see it as a technology, just like you said, versus the other side is like, we're not getting, we don't want to get involved with that.
Completely agree. What do you think? What events do you think will be those trigger events, and how far away do you think we are from those mass onboardings?
It's a very good question. I think right now what we have is we are about to have the technology to onboard the masses. So our problem is not going to be the technology. We're going to have Shopify launching an NFT marketplace. Instagram, they were supposed to forget about that. Reddit, Amazon. So we have the technology in place. We can buy NFTs with a credit card. So the technology is there. I think what's going to take the most time is going to be the education around that. And it's going to happen very slowly. That's why I think we will never see the adoption that we saw in 2021, 2022 during the hysteria phase of NFTs, where we had like a huge spike of people come in and then leave. I don't think we're ever going to see again the same bull market that we saw. A lot of times when people think about a bull market, they think about fresh liquidity coming into the space. Personally, I might be wrong, but I don't think we're ever going to have a bull market like the one we saw before, where random projects are going to launch in 3-4 weeks of marketing and then sell out. Where it's going to be a lot more Web 2.5 focused, where we're going to have drips of adoption, with Reddit launching a collection, Starbucks launching a collection. Next thing you know, the next Top Gun movie, the 5,000 tickets worldwide are going to be sold in as NFTs, by the way. There's just me giving random examples. I don't think that's happening. I think that's how it's going to happen. This curve is going to be very linear, but if you project very long term, all of a sudden, it's like the internet adoption. I think it's going to be very similar. And this brings to the article we co-authored together, Samuel, talking about where we are exactly on the adoption curve of the NFT space, and how early we are, and how we are following the exact same trajectory as we were with the internet.
Yeah, I think I think there's going to be. I kind of agree with you on the linear approach, and I completely agree with you on the Web 2.5. I do think though there will be industry specific explosions. So there will be a gaming one. There's just no doubt about it. You've got I think you touched on skins last week with the 160K sale. So there's appetite to pay for individual assets that are literally like PFPs. You put it on your gun. So I think there will be appetite like that. So I think there will be sub-segments of the NFT space where you will see those bull runs. But I do think I completely agree that the long-term view of how this technology is used is going to be within the corporate side of things, institutions. So how you position yourself for that is going to be completely different to how you just buy up a few JPEGs and hope they pump during the next bull run. I think that's where if you build like an actual product that a big company comes in and buys, that's probably how you make that kind of money. So
talking about gaming, what are your thoughts about the Yuga Labs second trip? This has been something I've been wanting to talk about. It's been a while. I saw some of the footage. I saw the Whale Swoosh made a thread about that. Footage looks incredible. What are your thoughts about that event?
I haven't looked into it actually. I'm not even sure what it's called. The current dynamic reveal that they're having, collection HV something.
Yeah, I know what you mean. Because they got those mystery boxes which are kind of revealing into something else. Is that what you're talking about?
Yeah, exactly. So the sewer pass side of things.
Yeah.
But I'm not sure how Otherside relates to the sewer pass.
So I think the other side, I mean, the second trip, just look at it in terms of like a beta test. This is their second test where they've got more people coming in. They're trying new stuff just to see if they can break it and see if there's anything that needs fixing. So as far as I'm aware, I think there wasn't too much lag. They all got split up into 4 teams. So it became like a collaborative approach to actually playing a game. So people were competing, but they were also like working together as well. So, yeah, so you've got the Bryson video up on screen, and that's ultimately that's going to be how you onboard people. You create a fun game, so you have people actually playing with each other. So this is probably the first instance where I've seen something that could actually onboard the masses if you've got a game that's actually fun. In my opinion, the second trip did what it was meant to do. It was a successful beta test, and people seem to enjoy it. There were some people saying about lag and stuff, but I mean, if you've got that many people playing around in such a small area, you're gonna have some difficulties, and that's what the whole process was for. So they'll probably iron those out or improve it for next time.
I did find the gamified aspect so interesting, where they had 4 teams split up, and the winning team received NFTs for their performance. And you can see that if you project that use case. When I saw that, I was like, GG, very good move, Yuga. Incredibly well executed. This model is definitely going to be a model applied in the future in gaming.
100%. I think, well, if you go into the specifics on Sony's patents, they've literally got that exact same thing. It's like, defeat this boss and you will get an NFT, which you'll be able to extract from the game and do what you want with it. And that's explicit within that Sony patent. So we know that all these other gaming studios are going to be going down the same route.
Very interesting. What are your thoughts on this, Kermit?
Right. So the other side is very new to me, as I said, so I really don't have many thoughts as of now. What's interesting to me is rather the discussion of I think it was with you, Sami, where we were sort of bouncing ideas off of each other on the adoption curve and how long it'll take for Web3 companies versus Web2. So who's going to be faster, number one, and how long do you think it'll take before we start seeing those major games come out, right? So Yuga Labs, when did they get funded again?
April.
Let me look it up.
2022. So yeah, they got the 450 million in April, and then they got the Otherside mint, which, to be honest, probably most of their proceeds was in May. So it's taken them 11 months, almost a year, just to get from funding to actually having a product that's half fit for purpose.
To the second beta test. Meanwhile, we're only seeing like scrambles of Web2 businesses, filing patents, sort of plotting. Meanwhile, you have this Web3 giant that's already halfway through with releasing a game. So that's interesting to me, is because going back to maybe the fashion industry. You remember, Leon, when we were talking about how good of a job Artifact were doing and Azuki. So both Artifact and Azuki, 2 Web3 native companies, although Artifact was acquired by Nike, they do about 90% of the entire phygital Web3 volume. So they've well capitalized this niche, and that's even with, I think, who was it? That there was a bunch of Web2 giants that also tried to onboard the space and failed, right? They barely could eat away from the market share that Artifact especially had. So this is where my thinking is going. I know that it's a big loop, but this is where my thinking is going, is Web3, who's likelier to get to the finish line faster? And even when Web2 catches up, are they even going to be able to compete with someone who's a Web3 native?
So we're looking at a huge funded Web3 native company taking a year to get to building that. Most Web2 companies will probably have 2 years lead time to get through those quarterly reporting and stuff like that, just to get the approval for all those things to go through. Realistically, I think what's going to happen is you're going to have all these Web3 native brands come up through the ranks, create these cool products, and Web2 is just going to acquire them. Now, I don't know what that means for Web3, the Web3 ethos, because you've got like a centralized intermediary acquiring a brand and potentially extracting value and giving it to shareholders. But I think that's probably the way we'll end up going. And there'll always be that ethical debate: are we Web2 or are we Web3? And we'll probably meet somewhere in the middle.
I mean, the way I see it is, anytime there's a big technological innovation, this is where you usually see the established big players stumble and new players emerge. So before the internet, we used to have, the Nintendos and all the big players. And then the internet happened, and this is where we saw the new rise of new gaming platforms, new gaming giants. And we saw this again and again and again in every industry, the newspaper industry. The companies that were crushing it when it came to the newspaper game, they had established businesses. They weren't able to catch up once TV came out. And when social media came out, you know, when I want to go and listen to see what's happening in the business world, I go on YouTube. I follow YouTube. I don't go to CNN anymore. So I think we are right now at this moment of time where we are about to see that transition from the Web 2 tech towards Web 3. And with that, we're going to see the disruption of a lot of old established players along the way.
This leads me to actually a very interesting study I found by, who was this by? McKinsey, I think. Yeah, McKinsey.
Yeah, McKinsey. Yeah.
So it's very interesting. In the year 2000, the median age of S&P 500 companies was 85 years.
Very interesting.
In 2018, it was 33 years. Their projection is that by 2023, the average age of S&P 500 companies is going to be 12 years. That means that most S&P 500 companies have already been established or are currently being established. Right? So you fit this in with our current discussion, and all of a sudden we have, well, are most of these companies going to be Web3 companies?
It's very interesting. I really love that chart you just showed. And innovation is increasing the rate of disruption. The companies of today are not going to be the companies we're going to, like the companies we're, gentlemen, like Instagram, Airbnb, Uber, all those were not around 10 years ago. Like they were all birthed in the 2008 to 2010 financial crisis. And now we're going through a recession again. And this is where we're going to see the new round of Ubers and Airbnbs are going to be birthed today. So I'm incredibly excited. One thing I did want to talk about, and Samuel, this is something you wrote about. So you made an article about the luxury goods market, which is an incredible, a big blue ocean when it comes to the Web3 space. A lot of potential. Gucci just announced a partnership with Yuga Labs. So I'm going to go through your article very quickly, and then I want to hear your thoughts as the author of that. So you've mentioned that the entire luxury goods market worldwide was worth $382 billion. And Gucci's revenue yearly is $18 billion, which is about 5% of the luxury market. So Gucci owns 5% of the entire market. Yesterday, Gucci and Yuga Labs announced a new partnership, and this one has something to do with the Metaverse. And you've mentioned that Gucci continues to grow and it solidifies its presence as a top luxury brand. Their e-commerce business has expanded significantly over the past decade. Its revenue contributes to 10% of its overall business. So you think that a Metaverse expansion is the logical next iteration or evolution in its digital journey? What are your thoughts there, Samuel?
Yeah, I think that's exactly right. I think what is digital fashion? I guess they have their, I can't remember how many stores, maybe close to 600 physical stores. That was like that's how people purchased clothes back in the day. And I think even I was of the view that why would you buy clothes online when you need to try them on? It's not a very convenient way of doing things. So I guess their e-commerce business then grew out of that, where you could actually return things. So similar to Amazon, it's easy to return clothes, ASOS, whatever. So you could actually grow that business. And I think the next stage makes sense that the next digital evolution of that would be through perhaps Metaverse. So rather than having clothes that you personally wear, you could have digital avatars that wear these clothes, or you could have product placement, so advertising in the Metaverse. You could have so revenues coming from that or whatever. So I think it's the next iteration. And I think the fact that I guess a lot of Gen Z spend more of their time online than they do in person, it's kind of seeing that generational shift in behavior. So time consumed. So there's less weight then put on physical advertising or things happening in person, and more weight put on sort of looking to the future and appealing to that younger generation.
And that's an interesting, something interesting you mentioned in the article, which is that half of Gucci's sales come from millennial, so people below the age of 35. And obviously, this is the type of user behavior, user persona that we see in the Web3 NFT space. It's people below the age of 35. So my question to you, how would it work exactly? Like I understand Yuga Labs, Gucci, two big players, but what does that look like? Like what does that look like? Do I get a virtual Gucci product in the metaverse that is an NFT? Can I redeem, like what do you have in terms of what does that partnership look like?
I think they're probably trying to work it out at the moment as well. But I think, like you mentioned, you could have physical backed goods. So you touched on Azuki with their PBD technology. So you have an Azuki jacket on your avatar. You like what it looks like. You want to have it in real life, so you can redeem it. So I think that could be a case where people end up creating an avatar, what they want to wear on that avatar with Gucci branding, and then all of a sudden you can then redeem it in physical, so you can match your online persona. That could be one avenue. I mean, it's literally tapping the surface, and I think that's where it's exciting, because I don't think we've actually realized what those full use cases are yet. And the only way that you can really do that is trial it, see if it works. If it works, great. I mean, what is it? What's that? Viagra. Viagra's original use case wasn't intended for that. So it was like, well, they intended to do something else, and a byproduct of that, they ended up creating a huge business out of it. And I think that's a similar thing. They're going to trial all these different things digitally, see what works.
A medication for the heart?
Yeah, something like that. And it just, obviously.
Yeah.
Probably not the best analogy, but you got my point. It's like, well, they'll try all these things in a digital realm, see what sticks, and then some things will flop, but other things might work. And I think that journey as well, because it's completely new, you're going to have Yuga and Gucci going along for the ride together. And we'll probably see a lot more brands get in there as well. Because I remember back in the day when you were watching films in the early 2000s on, I don't know if it was on VHS, but you'd have the film come up and there'd be like Coca-Cola in the background, it'd be product placement. So you could have Gucci including some clothing in there, or some form of advertising in the background as well. So advertising is going to be a good thing. Where the attention flows, the money goes. So there's a couple of ideas there, but yeah, I think it could be huge.
Something interesting to hit on is a big problem that luxury brands face is counterfeit products. So instead of you buying Adidas, you're buying Abidas. You're getting an Abidas from Facebook Marketplace. And Kermit, that is a stat that we saw together, not necessarily a stat, but the European Union launching Web3. They're going to use NFT technology to fight against fake merchandise. Remember that article we looked at?
Yeah, the European Union. So they had laid out this model of using NFTs to battle counterfeiting, where you have, well, number one, it starts with the identity register. And then
it's like the patent officer.
Yeah, it's like the patent officer, and then all the way to the manufacturer. You have who's authorized to use anti-counterfeit label, create and package physical products, consume NFTs, apply NFTs, and then the logistics operator. And because they're NFTs, you can see where they are in that process. You sort of have the entire framework from the rights holders, manufacturers, all the way to the retailer and the consumer, where you can track that entire process, and you can verify that this is indeed, Gucci, or this is indeed Adidas. It's not Abidas. It's not Gucci.
Gucci.
But it's also worth noting. So this supply chain tracking can be done for any product or service. So if you look at the energy industry, for instance, where you're having companies being forced to comply with renewable energy sources, a certain level of their energy consumption has to be renewable energy, but they're struggling to prove that. So the way they can prove that is the energy comes from wind or hydro or whatever. They can work out the portion of that through this similar supply chain tracking to then prove it, so that they can show that they're compliant. So actually, clothing is one thing, but this same process can be used for pretty much every single industry. And I think that's where the potential is.
Very interesting, very interesting. A lot of very good points, gentlemen. We are above the 1 hour mark here. So this would be a good time to start wrapping up the conversation. Really what we've looked at so far today. Great points. Y00ts bridging to Solana. What does that mean for Y00ts bridging to Polygon? What does that mean for the future of Solana?
Bridging back to Solana.
Yeah, we changed our minds, guys.
2023, 24.
What does that mean for the future of the space? Is that going to leave a gap in Solana? What does that mean for Ethereum and Polygon? And us as consumers, is the future multi-chain or not? Is it cultural relevance that is going to dictate what makes a chain? We have Yuga Labs' second trip. So that's a perfect use case of what NFT gaming would look like, and could be the beginning of a new age of innovation and a new Fortune 500, S&P 500 companies fueled by Web3. And finally, we looked at Ticketmaster, creating new use case, new ways for bands, artists to monetize their audience, create extra utility and value for their top fans. And of course, we covered a million things in the meantime. Gentlemen, this was an incredible conversation.
Awesome. It's been a great
Awesome,
to catch up and great conversation.
Amazing. Thanks, gentlemen.